So now you've got some current projects you're raising capital for. They're going well. Tell us about your short-term rental portfolio and things you're proud of, things you wish you'd done different.
Yeah, absolutely. So, starting off with, a quick journey about how we started in short-term rentals. I mean, it was literally just time to do something different, right? And I had just lost a huge investment that I really didn't train for. I wasn't ready to do that. Hit rock bottom, then started building out, just jumping back into building something that was memorable and that was created wealth and long term, right? More of a long term vision of myself. And I went into flipping, wholesaling, and then I realized that I needed cash flow and I needed more consistency and I needed a little bit more predictability, which the two other strategies didn't bring. And that's how I started jumping into the building of our portfolio. But when I started, I essentially was renting out a bunch of units because it was a lot cheaper and it was a lot less risky. So I was doing these flips and then I went and rented like 10, 20 units. By about a year and a half into the business, I had 40 doors, and when COVID hit, I had 40 doors and only two or three of them were houses that we were trying to flip or keep and then had turned into either temporary or long-term short-term rental assets, right? So, and then all of a sudden, COVID hit and that was a great lesson. And my lesson there was stop doing these little units, right? Stop doing these, like trying to go low risk, high reward, right? So I went and started changing entirely everything in my portfolio because I have more confidence in myself. I mean, when we start anything, nobody has confidence. You develop confidence with small wins, right? So my little wins were, hey, this property's cash flowing, this portfolio is good. Even though COVID was a hard hit in the face for a lot of us, I was able to come out of there and realize that I needed to change to an even better strategy, which was going into homes, single family homes. So going from small rented apartments that I was subleasing on a strategy called rental arbitrage, which is like you're renting to rent, into ownership of these homes, and give it 2020, 2021. That's when that was when I met my wife, right? Before COVID, I met my wife there, and then things just started changing because I started thinking differently after being in another mini struggle in 2020, right? And I came out of there, but now I had someone that I was sort of partnered with, which is my wife, right? So we were partnering at the time. We started dating later on, and then if it wasn't for her, I don't think that I would be here today in the position that I'm in and how we're doing, other than not having a family. I don't think that I would have been able to build what we have today in such a short amount of time. And the lesson there, guys, it's having the foundational structure that helps and, help, because I was able to really be the visionary that I can, be the deal maker that I am, and being able to work on what I loved, which I couldn't do before I had a partner like her. Right. So, big lesson. And that's how we sort of, started, and then we just got into creative finance, very in depth, right? Which, my favorite strategy there is sub two. When you buy property subject to their mortgage, you leave their mortgage in place with the seller. So we bought tens of dozens of properties that way. And we ended up flipping some, wholesaling a few, and then keeping what we have now, which is the strategy I love the most. And that was a transition, into the ownership of the portfolio. And as we did that, I also discovered that the more amenities, the better amenitized, the higher end experience that we created for our guests, the more customer centric we became. And then the more experiential and unique properties that we created, the better they would do, no matter what. And that was how we transitioned into the strategy that we have today. And in 2022, it was like a bulb. How do we scale this thing? It's working now. We really discover what wins. Let's go figure something else out. Middle of 2022, I go and join this program, Mastermind, where we all met, right? And then I didn't know anything about raising capital or running a fund or running scaling a portfolio. And I just went, I need to raise some capital, right? That was what I needed. And fast forward a year after that, I really started building this fund. It was the beginning of 23, so it took me 6 months. And then I met Trevor about a year and a half ago or so. And then that's how we built the dream that we are, the entire, the execution we are actually doing right now, which is our fund, right? And that, I mean, that's a quick story of it. It's been a long journey, and it was all because of the things that happened to me during the hard times.
And the rent arbitrage, do you still do that now?
We still have 2 properties that we're arbitraging that we've had for 3-4 years, and they kill it. One of them actually kills it.
So do you recommend that business model? Because that's one that I see advertised all the time, is the rental arbitrage model. And I have yet to see, well, on houses, I haven't seen that work on a flat basis. And then on the rental side, I've seen it work for apartments, but it also seems like the management is unable to get the short-term rentals out. And I am talking from experience, where you've got a property and you've got one tenant who's inside there. They're doing a rental arbitrage thing. It. They're breaking their lease. Technically, they are causing problems for the asset, but you can't evict them, or you can, but it's expensive, and they're still technically paying you rent. So it turns into this kind of situation where, if you want to get them out, you can, but it's going to be expensive and not easy. And if the person wants to bankrupt their lease organization that's rented the unit, then you still won't get paid anyway.
I think that's a California problem you're talking about, Max, where it's ran by communists, like in everything you're describing. Like in Texas and Arizona, like if you break the lease, it takes 30 days to get someone out.
They do quick. Yeah, you might be right. You might be right. Yeah. So within that model, they've done well. And how within these assets, do you have any like super stunner short-term rentals? Hey, this property we bought for X and it's just nailing it doing. Do you have anything that's like that? So I'm going to ask the other question on the losers too here in a second.
Absolutely. So all of the ones that have been since 2021, maybe except for the smaller assets, because I bought some for like $5,000 down, creative finance, but all of the nicer 4 bedrooms and up with pools, I mean, they're all doing really well. Right. And I would say like the best story is that one rental arbitrage that I got in 2021. I put $35,000 down into the whole project. We paid $3,500 a month, and it does about $170 to $180 a year. So we're netting $70 to $80,000 in one house every year. Now we're in the 4th year now. And then the owner landlord is willing to, he's willing to extend the leases, and he owns a plumbing company. So we use him. My wife uses him. She runs operations for all of our properties. So we have a really good relationship there, so we can continue to extend the lease. That's a great case study. And that was a rental arbitrage deal. Now I have several ownership they're very similar, but obviously in a different context, because there's more money putting down, and there's a huge difference, right? When you do rental arbitrage, you cannot touch the asset unless you have permission. You can't paint the rooms. You can't add a bunch of things in the backyard. So when you asked, does rental arbitrage work for people? It works, but you're capped, right? You can only do so much. In a home that you own, you can change everything about the asset at any time that you want, as long as you have the funds. And we've been able to find the most success by creating these experiences, by testing things in mostly the open areas, the backyards, and, the painting the rooms. You can't do that in rental arbitrage. Right. So I love the ownership model, love the creative finance model, and I love buying portfolios. That one is a winner. The same amount of work.
And what about the loser?
And what about the losers? I've had quite a few losers. I would say I started with the flips that I lost on. I did, and I'll take you back to the whole entire thing. Right. I bought these flips for like 70, 80K that were floods from Harvey 2017. And that was terrible. It was so much work for very little profit. I lost on a couple of them, and that was bad. Right. So I learned my lesson. You know what? Don't do flood homes. Right. Then I went to wholesaling, and that was cool, but it was chunks of money. And then I went into the rental arbitrage stuff, all the properties that we were renting 1 bedrooms. And then how I came out from there, they were winners until COVID. And then from COVID, everything changed. The landscape changed. The metro areas changed. The demand changed in those metro areas, so they never recovered. So I'm sitting here a year later after COVID, and the properties were still breaking even or barely making any money. So I'm like, let's get out of the leases. That was the convenient part of rental arbitrage. And now up today, we have some properties that we currently have that are like just sitting on the market, which is my lesson of 2024, right? Stick with what you know, right? We have some properties that I bought at very low interest rates, 3, 4, 5%. And because of the landscape of interest rates, et cetera, they've been sitting on the markets. It hasn't been the appreciation that we needed, and I bought them creative finance. They're sitting on the market, but they're doing okay as short-term rentals, not what we really want. But those I would call them losers or short-term rentals. But if we do sell them, they'll become winners.
Also, I mean, I think within those things, I think it's we all want more winners, but within you do 20 deals and you have one that doesn't go well, the other 19 are the ones that you want to be focusing on. I think that's one thing people forget about is we all want to bat 1,000, but really more than anything else, we want to be profitable. And, that involves taking both some risks and then also learning from those mistakes that actually came in. Trevor, you have a comment?
Yeah, I think George is doing a really good job now of to toot his and mine and our horn, he's really highlighting the benefits of syndication, right? Because right now, George and I, we're in contract to purchase 18 properties in St. Louis. And he's gone through all these, I don't think George has gone through a lot of losses, but we could call them lessons at a minimum. And money was lost at times, right?
Yeah.
And so, and myself included, right? I've got, I've learned lessons as well, both through acquiring, my portfolio, which isn't quite as large as George, but then also managing, over 50 short-term rentals at this point. And I've managed a lot of crap over the years. And so, we've operated enough bad deals to know what the good deals really look like. And that's what happens when you invest passively into a syndication model like we're doing with these 18 properties that we need to close on and we're raising money for is, when you hand us your money, you're basically skipping all of those lessons that we learned and benefiting from them by simply putting your money with operators that know what they're doing because they've had those lessons, those losses.
So they're not really they're investing with someone who already asked.
Yeah. And you're skipping all of the losses because if you do it yourself, I mean, you're not going to know every detail. It's impossible. It's going to take you many deals.
Yeah. It does. There's such a fallacy in real estate that, real estate's passive. You can invest. For operators, oh my God, it is the most not passive industry.
It is not.
If anything, if you got a problem, the tenant's got a problem, there's an issue, you're getting woken up at 2 a.m, a pipe bursts at the wrong time, water heater stops working, you're going to get a call at some time. And
guests can't get into the property. They're standing at the door. The code's not working.
So, yeah, totally. And I will agree with everything that was just stated. You invest with someone else who's already done it. That way it makes it makes it passive, and it also allows you to invest with guys who are taking the black eyes or already have, for the investors. So, and let's hear more about this new fund. So you've got these deals that you're raising capital for right now. They're in St. Louis. Let's hear about how you guys sourced them, and let's hear about the upside of those opportunities.
Yeah, absolutely. I love it. Yeah. What happens when you're in a high level group, right? Magic. That's what happens. So us from being a mastermind group, which us three met at, right? Trevor and I got together, and I recall this. We were in a catamaran at our retreat in, was it Miami? Miami, no, second year. It was in New Orleans. So last October. So we're talking to this gentleman, his name is Matt, and we started building a relationship with him. Right. And fast forward 6 months later, Trevor's team is managing 3 of the properties. Trevor's team has increased their revenue above by 80% of the competition. Right. And then all of a sudden he's like, hey, we've got these 3 properties that we could buy. right? And then the whole thing progressed from there. You know, we started negotiating, kind of going back and forth. And I mean, this is a guy that we built a relationship with a year ago, and we're already in business with him, right, as a group. And then all of a sudden, fast forward 2 months later, we have 18 properties that are coming from this group, right? We've picked the 18 best out of 100.
He
Right.
was selling, yeah. To put a little more like depth to that story is, you know, Matt wants to retire. He's been operating real estate for like 30 years now, and he just wants to sell all of his real estate and turn into a hard money lender, basically, and also back younger operators like ourselves that are competent. And so, you know, when he said, I'm selling 70 properties, and I was like, you know, me and George talked about it. I was like, we'll buy these 3 that we're already managing because we know them well. They're doing well. So we'll buy these 3. And he was like, no, you'll buy 18. And we're like, okay. And he's, you know, and he's also being a true partner. He's helping with the financing. He's helping with the capital raise. But yeah, that's all just from building that relationship from a year ago.
So I'll actually add into this. For anyone who's listening, individual is Matt Owens, and for the Real Estate Dads, episode number 1. So he was the first interview.
Nice.
And
He is,
and you know, if anyone wants to listen to that that interview, it's actually it's a really fascinating one. It's a great story from a guy who's done a lot of different types of businesses and been successful with it. So you know, hats off to that organization and Matt also.